Hello grade 12s, good to be with you again. Today's maths literacy lesson is all about income and expenditure, or income and expenses. Now this is something that you should be familiar with. You know what it's like. You've probably got a bank account, or at least you've got money in your wallet or your purse. You know that money comes in and money goes out. And so we want to explore that process both for personal, for household, for businesses, for governments, for international organizations. So you need to be very familiar with the basic concepts so that you can apply these to different contexts. So let's go and have a look at what we're hoping to achieve. So in this session, what we're going to try and get through, we're going to try and revise about the types of different income and different expenses. We're also going to look at profit, loss, and the break-even point, and apply these, as I said, to different contexts, personal as well as business, and we could even say global, international, national. So be very aware of what's happening. We'll take these concepts one step at a time, make sure that we can apply them. Before we get into that discussion, let's revise some terminology. So the first thing we're going to come up and say, well, what is income? Income over here, well, income is the stuff that we like. It's all the money that is paid to a business or a household. Money that comes in, income. Come to me, money, it's coming in. And it's not going out. Well, hopefully not too much is going out. That's what expenses are. Expenses is all the money spent on running the business or the household. And EX, it's like exit. And that's how I remember that it's money not coming in, it's stuff that's going out. Now, we need to make sure that there's a balance between these two. We can't work, we can't survive, we can't carry on operating and running a business or running a household or even running our lives if we don't have enough money and we've got too much money going out. So that slogan, born to shop, sometimes we have to curb it and we say, no shopping for the moment. There's not enough money. We've got to do some saving, some consolidation. So being aware of your financial position is very important in this respect. Now, if we look at running a business, whether it's a small business or a big business, there's something that you need to know. We always start with asking, what are we in business for? We've got to buy some stuff, we've got to make some investment in the business, and we take the materials and take the goods that we've got, the buildings or the infrastructure that we're paying for, and we then do something to that and we pass it on to our customers. We buy and we sell. Now, in terms of the cost, what it costs me of an item, so let's just give an example. Let's say that I'm going to set up a little store on the side of the road and I'm going to sell chocolates. Go to a large supermarket or wholesaler and I buy chocolates in bulk. Don't eat any on the way to my little shop. I'm going to say, what's my cost price? What did it cost me? So the cost price is the price that the business pays for raw materials or goods. So in my case, I've bought the finished article, the goods. I took the effort to get onto get some transport, go to the wholesaler, loaded up the material into the vehicle, brought it back, packaged it possibly, and then I'm starting to sell the same thing that the wholesaler was sold, but I'm going to sell it at a different price. What I paid for it, that's the cost price. What it cost me. So I need to include in that cost price what I've paid the wholesaler. I'm going to have to include in the cost price the petrol and the transport cost that it got to take me to that particular place. The next part, I've got to also think about the packaging, what I'm going to do in terms of the packaging, and I might even want to in terms of the cost, because I've spent some time on it. I want to make sure that I'm covering my time, my effort, because if I just take those things, then I'm doing it for free. Want to include that in the cost price. If I don't include that in the cost price, well, then I'm not going to do very well. I can't sell at the cost price. I've got to sell at more than the cost price. The selling price is the price the business charges for goods or services. And all those things that went into the cost, what it cost me to get that product, to get that thing onto the shelf, that's the cost. Now, the difference between the cost price and the selling price is what we call profit. So we need to make sure that we are in business to make a profit, not just to be happy that we can donate our time, donate our transport. No, that's not going to help. We need to make sure that everything is covered and that we are actually making a profit and that it's worth the customer's while to get the goods from us or the service from us. Now, there are three scenarios that I'm sure you're aware of, is when we have on a particular item, we have a situation where the cost price and the selling price are equal. All the costs are accounted for and all that money is paid back by the selling of it. Then we would say, well, we're not making any profit. We are just breaking even. So break even is when the total income for a period of time is equal to the total expenses for that same period. So if I spent and I invested time and I charged that time to the company and I spent, say, 5,000 Rand and I sold goods equal to 5,000 Rand. At the end of the day, I've covered my expenses. I'm not in debt, I'm not owing anybody anything, but I've covered my expenses. I've sold all the stock that I have and I've taken in 5,000 Rand. I started with 5,000 Rand, I've got 5,000 Rand back. Everything is square, it's all equal. That's my break-even point. Now, obviously, what we don't want to happen, and this often happens for small businesses and sometimes for larger businesses, even countries have this situation, when the total income is less than the total expenditure for a period of time. Now, that's a very dangerous situation because we are investing, we are buying, and we're not selling enough. We're not getting enough income. Could be for a number of reasons. We're either spending too much or we're not getting enough money in. So make sure that you understand where those situations can come. We say that we're running at a loss. In national terms, we say there's a budget deficit. There's a gap. We want to spend all this on new schools, new roads, new houses. But the taxes don't cover that bill. We're running at a deficit. So what the government has to do then is they have to borrow money and they have to pay back interest on the loans that they take. Sometimes the interest on the loan means that they run in more of a deficit. And so that's where we get financial problems. Big countries, somebody like the United States, they have a federal deficit of billions of dollars. You won't believe it. But they can't meet all their needs. They can't pay off their debt because they've borrowed too much money. They're running at a loss. We don't want to get there. Okay. Obviously, where we want to get to for our business or our household, we want to run at a profit. We want to have some extra money left over. So when the total income is bigger than the total expenses for a period. In simple terms, that means that the selling price of a set of goods will be greater than the cost price. And we'll be able to accumulate some profit. That's called profit. The amount of money that's left over that you can bank. And what are you going to do with that profit? Well, you're going to use it the next month to buy more material, to go back into business, to pay your loans off. That will all happen so that you can carry on surviving. You might even be able to give people that have invested in your business a bonus. You might be able to say to them, well, because we've done so well, you can have a share of the profit. Very important idea. Now, to make sure that we don't run at a loss, that we don't just break even, we need to do some planning. And finance is all about planning. Now, we can't predict everything. We can't predict what's going to happen to the exchange rate, for example. One day it's at $8. 8 Rand is going to, it's going to cost you 8 Rand per dollar. Next day, 11 Rand. Next day, 12 Rand. We don't know. Then it's back to 10 Rand. We don't know what's going to happen in some situations. One day, everybody seems happy to invest in the country. The next day, everybody's running away because of different situations. Maybe there are too many strikes. Maybe there's been an election. Maybe there's been a whole lot of instability and uncertainty. All of these things influence the world of business. But what we've got to do, we've got to make our plans very clear. One of the most important things we've got to plan is our budget. Budget is a forward projection. It's a plan to say, well, we would like to do 1, 2, 3. It's going to cost us 20 Rand. Now, let's plan to spend that 20 Rand. We think that if we spend that 20 Rand, we can sell the goods for 60 Rand. That means we're going to make a profit of 40 Rand. Now, that's very good. What will happen in the meantime is petrol could go up, telephone charges could go up, electricity could go up. We might find the price of the raw material comes down. All of these things we're not sure of. But if we've budgeted, we can keep track of, are we spending too much? Have we ordered too much? Have we got all our income? Did we sell something to somebody on credit and they haven't paid us? Those are all problems. We need to make sure that when we're managing a business, that we keep track of what's going on. And that's where, in a business, people will keep track of their income and their expenses. We're not going into fancy accounting and financial statements that the accountants deal with. Simply, the simple explanation is keep track of your income, all your expenses, and then you'll know what the state of your business is. Okay, so the budget helps us plan that, and obviously it lists all the expected income and the expenses, and then you can see whether you're going to have more money left over to do something like save it, invest it, or whether you're going to have to get additional income. You're going to have to make an effort to ask somebody to give you some money. Maybe you've got to go to the bank and say, please, I'd like to have a loan for 1,000 Rand, just so that I can get my business going. Now, all of those things need to be very clear and simple so that we can see what's going on. We plan our business ahead of time. And in our planning, we can plan for things that are definitely certain. So I've recorded these as fixed expenses. Now, these are expenses that are the same every month. They're definite. We know they're going to happen. So, for example, when you're starting a business, you know that you're going to have to pay rent for your office. When you're running a household, you're not living at home anymore, you're either going to have to pay the bank for the loan on the house, the mortgage, the house, the bond, or you're going to have to pay a landlord rent. You know that's the same. And you sign a contract either with the bank to say, I guarantee that I will pay every month this amount as long as the interest rates are at that rate. The rental agent, landlord, you say, I'm going to pay 1,500 Rand or 2,500 Rand for this small little flatlet, and I'm going to look after it, and I agree to pay on the 1st of every month. You know that's fixed. If you don't pay, the guy kicks you out, you haven't got a place to stay. Okay, so we know those are fixed expenses. We also know that we can get fixed income, because when you go and work for somebody, you're going to say to them, let's sign a contract, I will work for you, and at the end of the month, you're going to pay me a salary. And I expect in my bank, every month, there's going to be a certain amount deposited into my bank, my income, my net income. It's what I can then spend. All the deductions have come off, all the tax, all the medical aid, all the UIF, all those other little things, they've come off. What's left over? It's my income. Now, I have to manage that basket. That's a fixed amount. I can't go to my boss and say to him, well, you know, look, I did a little bit of extra work this month, so I'd like a little bit more next month. Or he could come around to me and say, you know what, you didn't work as hard this month, and so I think I'm going to just reduce your salary by 500 Rand. No, you can't do that. There's an agreement that says, this is the salary for the month. Got it? It's a fixed income. We know it's coming in. Now, that's very important. If we were renting a little cottage to somebody, we would go into an agreement with them and say, you have to pay us rent. They say, yes, we'll pay you rent. That would be a fixed income coming back to us. We might say that there are other types of expenses and incomes. We don't know what they're going to be. They could change. And so changing expenses or changing income is known as variable. Variable because it's not constant. It's things that change every month. It's not constant. Not the same. Not constant. Where this is the same. Okay? It's fixed. It's the same all the time. So what examples are there of variable expenses? Well, give you one here. Some months you might want to speak more on your cell phone. So you've just met somebody that you think is really nice to talk to, and so for a month or two, you're just getting to know the person, you phone them every night. You send SMSs, you text them some photographs, you use some data. Oh dear, at the end of the month, instead of spending 100 Rand on your cell phone, you see the account, oh, it's 250 Rand. Parents come to you and say, you know, you've overspent this month. Say, sorry, I didn't mean to. Understand why? I'll cut down. And so you cut down, you find other ways to do the communication, and the next month you find your expenses isn't 250, but it's only 120. So it goes up and down depending on how much you use it. For example, another one, you might decide that you're going to use public transport to get from one point to another. Now, depends on how often you get into that public transport will depend how many times you pay. You might say to myself, I'm really short this month, so you know what, instead of taking 2 taxis, I'm going to just take 1 taxi, but I'm going to walk the rest of the way. So I'll take the one that's the longer route and I'll just walk the rest. Or I'll walk in the morning and I won't, I'll get the taxi at night. One of those sort of things. These are decisions that you've got to take because they're not set rates. In terms of transport, your petrol costs, if you are running a car, they vary every month. The petrol price seems to go up. Some months it does come down, but it's variable. We do the same distance, but we sometimes have to pay more, we sometimes have to pay less. It's very difficult to budget. So what we have to do is take an average over a period of time and say, well, this is what we're expecting to have to pay. We'll put a little bit of extra in our budget in case it goes up. If it happens to go up, well, if it goes up more than we're expecting, we might be in a situation where we've got to cut down on some things to afford all these additional costs. But I hope you can see that in the whole concept here, what we're talking about is getting a balance. And in fact, we want the seesaw to balance in favor of having more income and less expenses. We want to have more coming in and less going out, so the seesaw is in our favor. More on this side, less on this side, then we're making a profit. And that's exactly what we're wanting to do. In terms of our personal household expenditure, what are we going to do with that extra money? We need to save it. Budget to save some money every month, so we don't have to get into a situation where you're paying loans, where you're paying interest, and where you've got debt. Now, that would be an ideal situation. The amount of debt in households in South Africa is too high. We need to make a plan to make sure that we don't go into so much debt, that we pay off our loans as soon as possible, and we start to save. Okay, there's some terminology. Now let's go and look at a few examples of income and expenses, and we're going to start by looking at specifically a household, personal and household situations. So what is personal income? Well, here there are different types, and you need to be aware of each of these. So I want to just highlight them. A salary, that is a fixed amount that you've agreed in a contract to be paid. Wages are often given on a weekly basis or for a short-term contract. Wages are usually identified with jobs and work that is more menial, that's more labor intensive, it's more physical work, you get wages. Salary is more a monthly cost. Wages are usually weekly. Then there's a thing that's called commission. Now, what is commission? Commission is you might be given a basic salary, and then you're told, my boy or my girl, if you are able to get so many sales, it usually works in the retail industry or a sales rep. Say, for example, you're selling second-hand cars or even selling property as an estate agent. You're told you've got a basic minimum, usually quite a low minimum, and then they say to you, but now, if you do make so many sales, after the first 2 sales, you can get 10% of every sale or 5% of every sale. Oh, that's quite a bit of money. So sales reps, people that are selling, work a lot on commission. However many things they do, however many clients or policies or cars or houses they sell, the more money they get. So their income into their household account is often variable because the commission doesn't stay the same. It depends on how much they sell. Now, another situation could be where you're charging per hour. Now, here, your salary would fluctuate as well. You might be a consultant who charges per hour. So your income won't always be the same. You'd get a salary, you'd get some extra commission. On a consultancy basis, you'd be paid for all the work that you've done. Now, here are some other sources of income. You could get gifts. Somebody might like you and say, oh, I'm going to give you 10 Rand this month. I think you've done a fine job. Or they might say, well, you know what? It's your anniversary. Here you go. Go and spoil your wife. Go and spoil your girlfriend. Go and spend some extra money. Somebody might say to you, I really appreciate what you did for me. Here's a gift. Go and get a gift voucher. Of course, you as learners will know that you don't necessarily, unless you're doing part-time work, you might get some money from your parents, pocket money, an allowance of some sort. Now, there are other forms of income. You could get a bursary. Somebody could say to you, I think you're a great student. We'd like you to go and study at university or study at a college and become somebody that's going to run a business. So for that case, we're going to pay your fees. We're going to pay you some living expenses, and that comes into your account. They pay the college, they pay the institution where you're studying, they pay for your books, and they give you some living expenses. Of course, you could also have a student loan, same sort of idea, where somebody said, look, I'll stand surety for you. You can't afford to pay for this loan. I'll pay the interest so long, and once you're working, you can start to pay off the loan. This money then becomes available for you to spend, to buy books, to buy stationery, to pay the accounts. Of course, we could have savings. It's a form of income. Well, because it's sitting in our bank balance. It is sitting there, and most cases it's earning interest. And if it earns interest, there's an extra amount being added to our income. Of course, somebody might pass away, they might die, and they might write up a will and say, I'd like to donate 10 Rand, 50 Rand, or 100 Rand of my money to my favorite niece. And so there you get an inheritance. You're getting a payback. I suppose there are other forms of income as well that you could think of others. You might do a whole lot of things. There we are on personal income. Those are mainly the things that you're going to get that we can say about personal income. Well, what about expenditure? Well, you first of all start with your living expenses. So things like food, clothing, and entertainment. I'm not sure that's the right priority. Maybe you've got another idea, but certainly your living expenses are important. You will also need to pay for your accounts, your basic services, your electricity and water, your taxes, your rates. We could put in rates there. You might have to pay for your telephone, whether it be a landline or a mobile line. You're going to have to pay for that. Now, you'll have to pay fees. These could be school fees or bank fees, things that we don't really like to pay, but they are contributions to services that we're getting. We might also have things that are optional, so something like insurance. This might not be something that I'll take initially, but I certainly would think about it. If I'm buying a car, I'm going to need to have some insurance. I might need to have some medical aid as well. It's in a form of insurance. In case I get sick, I've got some cover that will pay those unexpected requirements. Now, I'm also going to have to pay SARS, South African Revenue Service. And as soon as you start working, there's a deduction from your salary that's going to go and pay SARS. We don't like to think about it, but that's what keeps the country going. We're making an investment in the country. We're making sure that there are good roads, that there's water, that there's schools, that there is education, there are opportunities for South Africa sports teams to go overseas and represent the country. All comes from our taxes. So let's not begrudge the tax man the money that he needs to keep the country going. Now, a very important thing, and it's something that we need to keep in check, is our repayment of loans. We need to make sure the interest is low and that we pay loans off as soon as we can. Very important principle. Now, what's left over out of my expenses, and it's something that is very good, that if we don't make a forced attempt to do it, then we're not going to do it. We're going to say, oh, I've got lots of money, I'll just go to the shops. I can see the balance is still there. It's not zero yet. No, that's not the idea. We need to put some money aside. It's called saving. And when we save, that money could be in a different type of investment. It could be, for example, something that we pay into in a bank account. The bank keeps it and we can't touch it for a specified period of time. They've promised they'll look after it and they'll add some interest to it. That's a good way of doing it. We could have a notice deposit, something that you give the bank notice and say, I need this money in 32 days. I'll always give you 32 days before I pull it out. You might not need all of it. So you can have a fixed deposit, you can have a notice deposit, you could have something that's going to possibly give you a little bit more investment. You could link it to the stock exchange. It could become a money market account. Or you could directly invest in the stock exchange. You could buy unit trusts, or you could buy different types of investments that are related to how different businesses are doing. But the important thing here is that you need to start early. You know, and you will learn more about it later, that compound interest is the thing that wins. And we need to start saving for different things. You need to start saving for your retirement. Oh, you say, I'm only 18 or I'm only 19. As soon as I get out of school, I need to start thinking about my retirement. The earlier you start to save, the sooner you're going to be financially stable. You need to start saving for your future home. You need to start saving for your first car. You need to start saving for your family. Start saving for your children's education. So saving is a very important thing. It's an expense. We need to budget for it. We need to save for it. Okay, hope that's covered the ideas around personal income and expenditure. Let's move on to more things related to business. And we're going to talk not just about small businesses here, but larger businesses, governments, provincial departments, municipalities. So when we talk about business income, where's the main income coming from for businesses? Well, I'll tell you where it's coming from. It's coming from sales. Where we sell something or we give services, we render those services, and people say, well, because you've done a good job, we're going to pay you. So there is money coming in. We could get donations. Doesn't happen very often. Sometimes somebody might say to you, I'm going to just give you money with no strings attached. You can do with it what you like. It's like a startup incentive. I'm going to give you a grant because I think that you're a great person, you've got potential, you can make a success of your business, so I'm going to give you 5,000 Rand. You go and spend it on whatever you want to get your business going. So it's like a kick-up, startup financial arrangement. And there are people like that will give you money to get going. The next part is very important. Interest on money in accounts or investments. You could go to those same people and say to them, listen, we would like you to invest in our company, our little business. So give us 10,000 Rand and let it sit there and we will give you a share of the profit. That's a form of income. What we're talking about here, though, is I might take some of my money, my profit, and I might say, let me put it in a bank account. It's going to earn interest, and the interest can come back to the business. I might also say to my people that are buying, okay, you want to buy these goods, but you can't afford them at the moment. The goods cost 250 Rand. You can only pay me 100 Rand. So I'm going to open an account for you. And if you pay within 3 months, that's fine. If you don't pay within 3 months, I'm going to charge you interest. And I'm going to charge you interest at 25% or something per month. So then they've got to pay you not just for the goods, but they've got to pay you extra money. That could be coming into your business. Government don't work on selling things usually. There are some situations where you'll go to the government, a government department, and you'll buy things from them. So, for example, something like schooling, education. You might pay school fees, or parents might pay school fees. You're paying for a service. But in most cases, we can get municipal electricity. We pay for that service. In many cases, though, the government does things and we're not even aware we don't pay for it. But they do take it from our taxes. They get money from taxes. They get money, if it's local government, we call it rates. If we own property, we get taxes, we get licenses. So taxes doesn't just mean personal income tax. It can be a whole lot of things. So you're driving on the road, you need to have a license disc on your car, and you need to pay for your license fee to keep the car going. When you fill up with petrol, a portion of the money you pay for petrol is going to a fuel levy that keeps the roads maintained. All of that is money coming to the government, either at municipal, in other words, local level, provincial level, or national level. So the government works with that money, and that's their income. What about expenditure from businesses? What sort of things are going to be spent, are going to leave the business? Remember, expenditure goes out. So the business definitely has to pay salaries, it has to pay wages, it has to pay commission. There are also running expenses. These are services, telephone, rent. Now, some of those could be fixed, some of them could be variable. The rent was probably fixed, but the running expenses. This month, I might only print 5 reams of paper. Next month, I'm only going to print 2 reams of paper. 1 month is going to cost me more on paper and printing than in the next month. These are variable running costs. I might spend less time on the phone, so the phone bill is less. What about businesses making investments? That could be an expenditure. I'm going to put some money aside because I know that I had a really good sales run during December because I had a set of goods that I was selling for Christmas. Lots of people bought, but I'm going to save some of that money. I'm going to put it into account. It's going out of the business. I'm not going to touch it for a while. I'm going to touch it when the cash flow gets tight. I'm going to need to draw it back from there. As a business, I'm also going to have to pay taxes. So in terms of this, as a business, not only the personal income tax is paid, but the business gets taxed. I'm going to need to make sure that I make my contribution in VAT. Remember, everything that I sell, I have to add 14%, and then I've got to pay that to SARS, and then there's business tax as well, which I've got to reconcile at the end of every month. And make sure that at the end of the year, my tax is in order with SARS. So there's an outline of the two things, personal, business. Make sure that you understand these examples and you can add to them yourself. Now, the best way to illustrate this topic of income and expenditure is to have a look at some exercises, some examples. We're going to start with one example that deals with budgets and deals with a personal situation, a household situation. And I like it because it's a little bit different. So let's have a look at it. So here is a pie chart. You see, even though we're dealing with income expenses, we can show these things in different ways. And we can remind ourselves of how to interpret data as well. It shows the expenses of a trip overseas. So somebody's doing a budget and they've decided to put everything down on a list, and then they decided to draw a pie chart. Now, what's interesting is that they've indicated over here the angle of the segment. They haven't indicated that angle. They've indicated and they've allocated to hotels, they've allocated to flights, they've allocated to food, to entertainment, and to insurance. So that's quite a nice little summary of a business plan or a holiday plan. We can do budgets for any particular project. Doesn't just have to be an annual budget, but even for a small little project like a holiday overseas. We need to make sure that we do have enough money, that we've saved enough, we've checked the prices of the flights, the hotels, and we've allocated that these are the things we want to do. The shows are going to cost us that much, the skiing is going to cost us that much, the Disneyland is going to cost us that much, and that's how we've been able to allocate it. Now, you will notice that none of this tells us about the actual cost in rands. Doesn't say anything. It's just giving us a picture of what's the most expensive and what's the least expensive. Let's go and have a look at the questions now. And the first question is, what percentage of the money will be spent on food? So food is in this bracket here, and we've got to work out the percentage of the whole lot that's spent on food, percentage of food. How are we going to do that? Now, here is what you've got to remember. We've got to remember that the pie chart shows us a full circle. The number of degrees around a full circle is 360. So the total is 360. And what we're told is that the food is going to be 60 degrees out of 360. So that's what the fraction is going to be. And to get a percentage, I'm just going to take that and multiply it by 100 over 1. Okay. And so that will give me the percentage of food. Again, please notice, it doesn't tell me what the amount of money that I'm spending. Let's do the calculation. Right, we have 60 divided by 360 multiplied by 100. Get that that is equal to 16,6666. Now, what are we going to do with that? We're going to round off to 2 decimal places. So the answer that we're going to write down is 16.67%. 16.67%. So out of my whole budget, 16.67% is spent on food. Now, what does the next question say? Why is insurance included in the budget? Now, that's a very important question. Let's have a look. Doesn't occupy a big amount, only 12% of the budget. But guys, there's nothing worse than going on a trip, whether it's locally or whether it's internationally, and somebody doesn't have the right clothing. Somebody doesn't have their bag because it's been lost or it's been stolen, and you need to replace it. Now, that's why we have travel insurance. Maybe somebody gets sick, somebody has an accident, and this is very important. It costs a lot of money, additional money, to go and put somebody into hospital in a foreign country, or to fly them home. All costs additional expenses. We haven't budgeted for those additional expenses. So when we think about up to 500,000 Rand being spent in hospital because it's so many dollars a day and the exchange rate is against us and all that sort of thing, well, rather buy the insurance that says, if you go to hospital, we'll pay the bill. So if you're sick overseas, or you have your luggage stolen, or you have your traveler's checks or your credit card stolen, we'll cover the difference. We'll make it up to you. Make sure you can still enjoy your holiday. There's nothing worse than being stranded in a foreign country and not being able to do anything. Can't phone home, cell phone's been stolen, your money's empty. What are you going to do? You're stuck. You have to get somebody else to bail you out. And in this case, if you're planning properly, if you've got an insurance that's based on your situation, then you can go to the office and say, look, this is what's happened to me. I'd like to claim on that policy. Here's the document. Look it up on your system, and they'll help you get you sorted out so that you can continue to enjoy your holiday to the maximum benefit. So that's why insurance. It's just good planning. So I would say it's good planning, and it avoids large expenses, large unplanned expenses. Right, now that we've dealt with the importance of insurance, let's go and have a look at our final part to this question, and it's really an interesting question. You'll remember that we were given the pie chart, and I said to you, nothing's been told to us about the money. Well, question C, it starts to tell us something about the money. It says to us here that if the budget is 45,000 Rand, do you think the money spent on entertainment is realistic? So let's go back, and then the last part of it says justify your answer using calculations. So we've got to look at the pie chart. We've got to say to ourselves, first of all, what portion was used for entertainment? We don't even know that. We know that there was 16.67% used on food, but we don't even know the angle there. So to work out the amount of money that was used on entertainment, let's go and do some calculations. And the first thing we've got to do is we've got to calculate what angle that segment is. We've got all the other angles, so we're going to add those up, and let's do that here. We're going to add up the segments, 60 degrees plus 98 degrees plus 110 degrees plus 12 degrees, and we're going to add all of that up. And then remember that the total comes to 360. So let's get that total first of all. Let's use the calculator to do it. We're going to take 60 plus 90. It was 98, eh? So let's just add 8. So we've got it. It was 98 plus 110 plus 12. Let me just check. I've got 60, I've got 90 and 8. I've got 110 and I've got 12. What does that answer give me? That answer equals 280 degrees. So now what I want to say is this missing bit is 360 minus 280 degrees. Got it? So what I'm going to do is I'm going to remember that was 280 degrees. I'm going to now say I want to find the entertainment angle. I'm going to say 360 minus 280, and that gives me an answer of 80 degrees. So this is 80 degrees. Okay? Now, what percentage of the total is 80 degrees? Remember, we did something like that previously. We said 80 divided by 360 is equal to, and this gives me multiplied by 100 to give me the percentage, equals 22.22%. So I now know that entertainment is 22.22%. Very good. Now, how much money is that? Well, let's go and look how much money did we start with. We started down at the bottom, I think you can see, 45,000 Rand, and we're going to say how much money was the 22% worth. It's 22.22 divided by 100 to work out the percentage. How much money are we actually allocating to the entertainment? So we divide that by 100, multiplied by 45,000 Rand. And what you'll see is that the answer comes to 10,000 Rand. 10,000. I'll just need to close the calculator. 10,000 Rand. Okay. So out of the 45,000, 10,000 is going to entertainment. Now, what isn't clear is exactly what that's going to include. Well, you could say 10,000 Rand, that's a lot of money. First of all, it's not clear how long this holiday is for. Let's say it's 10 days. Well, that's only 1,000 Rand a day on entertainment. Well, you can say, oh, that's even a lot. But remember that we're talking about an overseas trip. Now, if we're talking about an overseas trip and we're thinking about the United States, we're thinking about Europe, we're thinking about North Africa, then the exchange rates are going to be different. Could even be thinking about India or Thailand or Australia. It depends where we're going, because if we're going to a place where the exchange rate is very high, let's take somewhere in Europe, then that means that one euro is going to cost you at somewhere around about 15 Rand. It means that if we take 1,000 Rand for our day on expenses, on entertainment, 1,000 Rand divided by 15, that's only going to give you 660 euros, 666 euros for the whole trip on entertainment. Not very much. You divide that again by 10 days, if we were going to spend 10 days, only gives you 66 euros. Where you can go for a meal, well, food is covered. You could go for a show and it might cost you 100 euros. So we need to think about it. You could go to a trip for Disneyland and it might cost you maybe 200 euros. Don't know. Depends how big the party is. Depends how big the thing. So you're going to have to justify it. You're going to have to say, because you're only going for a short time, or you're going to a country where the exchange rate isn't so great, 1,000 Rand a day seems reasonable. Compared to the amount that you've paid in fees, airfares and hotels and food, it looks like a reasonable amount. And you could argue that just by looking at this percentage. 22% of the total is on entertainment. Of course, you might go for a really cheap holiday that you could manage 1,000 Rand a day for 10 days and do tour here, a tour there. You could save your entertainment money and have a big bash at the end and make sure that you've budgeted correctly, that you've come out. So there's no right or wrong answer here. You've got to look at the figures and make an argument. You've done the calculation to see that the amount of money that you've got is 10,000 Rand. Now you've got to say, is this enough or isn't it enough? Well, like I said, it all depends on you. What you're going to spend, how long you're going to go, how many people are on the trip. If it was a single person, 10,000 Rand, I think it's fine. More than enough. You could spend your entertainment allowance quite comfortably for quite a while. If it was a couple, you might struggle. You'd have to make your choices. You wouldn't be able to do all the cruises. You wouldn't be able to go to the casino every night. You wouldn't be able to go to shows every night. But you're starting to get the idea that there's enough money there that will keep you quite enjoyably enjoying your holiday. Okay, well, guys, I think we've come to the end of this first segment, and that first question was quite an interesting one because it dealt with our personal dealings and it dealt with budgets. Hope you've enjoyed it. We'll be back after the short break. Welcome back, grade 12s. Now we're moving on to do some more examples related to income and expenses. Now, here's a very interesting scenario that we're going to look at. That's about personal budgeting. It's business as well as a bit of finance. It's a context of buying and using a car. So let's have a look at it. So when you buy something, it costs you more than its purchase price. That's a very important principle. Robin discovers when she wants to buy a car, she visited numerous second-hand car dealers and eventually settled on Zama Zazi's cars, where she saw two vehicles. Here are the two vehicles that she liked. It was a Polo, that's the Polo there, and there's a Jazz. Okay, so she was given the choice of a 1.6, a 2008 Polo or a 2008 1.4 Jazz. The mileage and the prices were slightly different. This one was 19,990. This one was 129,990. So there is a difference in both their specifications as well as their mileage as well as their price. So before buying the vehicle, Robin researches the comparative petrol consumptions on the internet, and she went to this site here, marvelousmotoring.com, and she finds this breakdown. So she fills in the cost of the car, the year of it, and she then gets the number of kilometers per litre. This is a rate. So we're doing something on rate as well. 12 kilometers per litre. This one goes 14 kilometers per litre. So 1 litre will take you further in the Jazz. 12 kilometers per litre, every 12 kilometers you're going to use 1 litre. So having borne that in mind, Robin then decides to plot some graphs showing the total costs. So very important for the purchase price and petrol, not services or anything else, of the Polo versus the Jazz. Using the data from the table, the graph shows the initial cost of purchase as well as the petrol costs per kilometer. And that's what the graph looks like. Doesn't look like a very good graph, if I may say so, but that's what we need to interpret, and we need to be able to fill in some data around it, because here we've got a comparison of costs, expenditure. We're going to need to compare two things to decide which one is the better one. Let's see how we go. It says, use the graph to help you answer the questions. There is a solid line. I think you can see that. This is the solid line. And and a dotted line, so we can see the dotted line. It says which represents the Polo's costs and which line represents the Honda Jazz's costs. Give a reason for your answer. So have a look at it again, you recognize there's a solid line and there's a dotted line. We have to identify which one is which. So I reckon that the easiest way to do this is to say to myself, let's get some detail about what's on the graph and what isn't. We know that it's starting at an initial cost, and we know that it's doing something about kilometers. So let's label the axes first of all, and let's put this over here. We're going to say this is total cost, and we know it's changing. This is distance traveled in kilometers. Something like that, because it's petrol costs, it includes petrol costs per kilometer. So we've got the total costs, and we see that this line is changing because it's changing with the distance traveled, the per kilometer. So we'll be able to work that out. So now we're going to say, well, this is total cost. What was the initial cost? The initial cost over there and over there. These are two different cars. Which one was the smaller price? There you go. The smaller price was the almost 20,000 Rand, 19,900. So this solid line represents the Polo, and the dotted line represents the Jazz. So just by looking at the initial costs, and I've compared the initial costs, when the distance is 0, I'm only looking at initial costs, and that's what I've done on the vertical axis. On the total cost axis, the one that goes up and down, Polo is below the Jazz. Now, the other reason that we can confirm that that is the case is that we're going to say, if I do a certain distance, which one is going to cost me more money? Which one? And we look at this figure here, or these figures here. This one is going to give me 12 kilometers per liter. This one is going to give me 14 kilometers per liter. So if I only have to fill up the tank I'm only going to get 1 liter every 14 kilometers, then it's going to cost me less to run. Then the slope or the steepness of the graph is going to be less. Look at it. This one, 14 kilometers, 1 liter, it's lower than that. This one, 12 kilometers, I've got to fill up more often. This one is slightly steeper. So this one is steeper. So it's going to, the petrol costs are more. And that applies to the Polo. Okay. So we think carefully about that, make sure that we've got it correct, and those are two reasons that we can give for justifying our answer. We can say, first of all, we've looked at the initial costs. Second, we've looked at the line. The one that is steeper is the one that's going to cost me more to run. Which car costs me more to run? Clearly the Polo. The Jazz is more economical. So I've answered that question. So now it says, which is the independent variable and which is the dependent variable? Now, guys, this is a terminology that when we look at a graph, we need to understand. Which is the thing that we are going to measure, and which is the consequence? Which is the input and which is the output? So the thing that we're going to change is the distance. This is the independent. We are not going to this is going to be the independent. Generally in a graph, in a straight line graph like this, the independent variable is on the horizontal axis. And this is my dependent variable. Why is it a variable? Well, because the price or the cost changes with increasing distance. If I only do a small distance, small price. If I do a bigger distance, it's going to cost me more. Okay, so I've answered that one and say, what is the value at A? Well, that's the initial cost of the Polo. So we identified that it's the Polo, it's the initial cost of the Polo. The Polo's initial cost was 19,990. So we've got that in the table. All we simply need to do is to write down that answer. A, it's the initial cost of the Polo, which from the table we know is 119,990 Rand. Let's move on to the next question now. Number D is an interesting question, and it builds up for us to be able to tackle the last question, number E. So let's get all the information we need. If Robin drives 30,000 kilometers, find the total cost, that means the purchase price and the petrol costs, that she will incur if she was using the Polo. Now, what isn't given here in this question, because it will change whenever you're doing this, is what's today's price of petrol? Well, I'm not exactly sure where she is in the country, but I'm going to round this off, and let's say that petrol costs 13 Rand exactly per litre. So if you are looking at this broadcast and the price of petrol has changed, you can fill in your own numbers. I want you to be able to do that so it becomes relevant for you. But what you'll notice is that the answers and the comparisons will be the same, whether we're dealing with the Polo or the Jazz, because the fuel consumption is staying the same. The final figure will be different, but let's take it at 13 Rand per litre. So what do we know about the Polo? We know that the Polo does 12 kilometers per litre. So with the consumption is 12 kilometers per litre. So if I know that I'm going to travel 30,000 kilometers, I want to get to how many litres I'm going to use. Now, there are different ways of doing this. We could say, let's just get some space so that we can do it in a particular way, and then we'll do a short way. We'll say 1 litre is equivalent to 12 kilometers. So what we don't want 12 kilometers, we want 30,000 kilometers. So what did I do to 12? What did I do to this 12 to get it to 30,000? Well, I need to multiply it by something. I first of all divided it by 12 and then multiplied by 30,000. So I'm going to say if I take this and I divide by 12 and I multiply by 30,000, then I'm going to get 30,000. I hope you can see that. It's divided by 12. 12 over 12 is 1. Multiply by 30,000 gives me 30,000. What I do to the one side, I must do to the other side. So I'm going to divide this figure by 12, which is just, and multiply it by 30,000. Now, let's do that on the calculator so that we can get the right answer. And pull up the old calculator, clear it from the previous time, and we're going to say we've got 1 divided by 12 multiplied by 30,000. 1, 2, 3. And we get an answer of 2,500 litres of petrol. 2,500 litres. So if I just do that, 2,500 litres of petrol. So what's that going to cost me now? Now remember, I said to you, you're going to have to use the price of fuel when you're doing this particular section. Go and find out what it is. For me, I'm going to round it off to 13 rands per litre. So the cost of petrol is equal to the number of litres multiplied by the rate or the price per litre. And so we get 2,500 multiplied by 13 rand, okay, per litre. And this is litres, and that's rand per litre. We do that, 2,500 multiplied by the cost of fuel, 13 rand per litre, and you'll see it comes to quite a big number. It's 32,500. So the cost of petrol that Robin's going to have to pay is 32,500 rand. That's quite a large proportion for driving this Polo, 30,000 kilometers. Well, you can see it's quite close to R1 a kilometer. That kind of makes sense. It's a gut feel that we need to be paying about that, which isn't very easy on our wallets, but that's the kind of thing that we would be expecting. You don't want to be paying too much more than that at this point in time. So now the next question, it says, after how many kilometers will the Honda Jazz and the Polo have the same total costs? Now that's a really interesting question. Let's go and have a look at the graph, what we're looking at. We're wanting to find this point here where they've done the same distance. The distance is the same, and the costs, the total costs, are the same. So we want to find the total kilometers where they've done the same distance, the total cost. Remember, the starting point for the Polo was a lot lower and the Jazz was a little higher, but over time they will have done a certain amount of distance. Because the Jazz is more economical running on the fuel, it will catch up to the cost of the Polo, and the Polo and the Jazz will have the same total cost. So how are we going to do that? Well, we've got to get two equations. And the first equation that I'm going to do is I'm going to say the cost of the Polo. And I'm going to break it into two parts. The cost of the Polo was its initial cost, and then it's the cost of petrol. The initial cost we can get from the table, which we know was the cheaper price, 19,990 Rand. The cost of the petrol. Now, cost of petrol is going to depend on the number of litres of petrol. The number of litres of petrol depends on the distance and the fuel consumption. So what we were told is that if you're traveling in the Polo, every 12 kilometers you're going to need to get 1 litre. We want to know how many kilometers. So what I'm going to say here is I'm going to put the 12 kilometers per litre, and if I divide that by a distance, a certain distance, which I don't know how far that is, then I will be able to get the kilometers will cancel with kilometers, and litres will then go to the top line, and litres times the cost in litres is the price, which is 13 Rand per litre. And the per litre will cancel with the litres, and we will get a cost. So there's my little formula that I'm going to use for the Polo. I'm going to write the same sort of formula for the Jazz. The cost of the Jazz was equal to its initial cost, which was 129,000 at least, 990. But now the cost of petrol was slightly different. It was the same distance that they had to travel, but now it's divided by not 12, but divided by 14 kilometers per litre. And then I must times that by the price of fuel, which we've said is 13 Rand per litre. Now, if you do that calculation, you work through it very carefully, what you'll recognize is at this point, those two costs are exactly the same. The total cost for the Jazz and the total cost for the Polar are the same. The distance is also the same, and we want to find the distance. So let's make those two equal to each other. So I'm going to write it like this: 119,990 plus the fuel cost, which was distance over 12 multiplied by 13. And for the Jazz point, I'm going to say it's 129,990 plus the distance divided by 14 multiplied by 13 over 1. We've got that, like that. Now it's just a matter of solving this equation. That might be a little bit scary. Let's take it one step at a time, and I'm sure you'll manage. The first thing that I like to do is I like to get things that are of the same form to the one side. So all of these expressions are dealing with rands, it's cost. Let's try and get all the money onto the one side and all the numbers and equations onto the other side. So I'm going to do that. I'm going to first of all subtract, show you what I'm going to do. I'm going to subtract from this side the 990 from this side. I'm going to subtract it from there. I'm going to take this and I'm going to subtract that from there. And what will I get left with? I'll get distance over 12 times 13 minus the distance times 13 over 14 is equal to 129,990 minus 990, and that gives me 10,000. Hope you've got that. Now, this is awkward. This is still a little awkward. I haven't got it the way that I want it to be, because I've got figures that are ugly. I want to try and get them to be the same. So what I'm going to do is I'm going to use my calculator. I'm going to say 13 divided by 12 is equal to 1,083. So 1,08333. And over here, I'm going to subtract from that. That's a distance, and I'm just going to put the D there. Distance. I'm going to subtract from that. Let's do the same thing on this side. 13 divided by 14. Get that answer, and that's 0,9285, and I could carry on 7. I'll round it off just now. Distance. And that's all equal to 10,000 Rand. Okay? That's all equal to 10,000 Rand. This factor multiplying by the distance, don't worry too much about it, but essentially what I'm going to do now is subtract so much with the distance in front of it, and I'm going to get one answer. So I'm going to take this value here, 1,08333, and I'm going to subtract from that 0,9285, and that should be good enough to give me an answer of 0,1548. I'm going to just make it 0,15. 0,15 distance is equal to 10,000. Okay? So far, so good. Now, how are we going to get distance all by itself? We're going to say distance, and we'll divide the 10,000 by the distance. We're going to divide that like that. We're going to say, right, let's take this number. We're going to use that as the denominator. 10,000 divided by 0.15, and we get 66,666,66. We were told to round off to the nearest kilometer. So what I'm reckoning is, if I do that, so the distance to the nearest kilometer, let's just check it, 66,667 kilometers. Oh, that's quite a lot of traveling that you're going to have to do before the Jazz starts being more economical than the Polo. But I think we've answered the question. Now, I think there's time for just one quick look at one last question. Let's have a look at it. Ingenia is a company that sells very good quality glass and pottery. They recently released a range of pottery, including special pots. The budgeted expense for 1 month of this new release are listed below. So here we're dealing with a business situation where we're going to be looking at income and expenses. So let's have a look what the questions have to say. Its first question says, write down all the variable expenses. So the first thing, it says the clay and glaze for a new pot. So that's for one pot, clay and glaze, it's 85 Rand. Is that a fixed cost or a variable cost? Well, it depends on how many pots you're going to do. So clay and glaze, it's variable. Clay and glaze, it's definitely variable. What about the marketing and distribution costs? Well, that could be variable as well, because we don't know. We might have a contract here. It might be fixed. I'm going to suggest that that's fixed because it's in a contract and it's rounded off. Telephone and electricity, I think that's definitely variable. So, because you don't know from 1 month to the next how many times people are going to speak on the phone, and unless you've got a bundle that allows you unlimited time on the phone, you're going to be changing your telephone costs and electricity costs every month. What about water? Water would also be variable. It's not likely to be fixed. It's going to change with the usage of, if you're putting more pots through, you're going to need more water to wash up the dishes, and you add water to the clay as well. All of that stuff is going to be a variable expenditure. What about hiring the factory and the wages? No, that's fixed. So in total, what you can see here, we're saying we've got 2 fixed costs and the rest are variable. Now, question number B says, Ingenia would like to make 1,000 pots in the first month of release to introduce to all their customers. Okay, what is the cost to cover 1,000 pots with the new pots? Okay, so we're going to need to get the total cost of making 1,000 pots. Let's have a look at that. Recognize that in terms of what we've been given, the only thing that is variable and based on the number of that we can do any calculations with budget-wise is that this was the cost for one pot. So in terms of that, one pot was going to cost us 85 Rand. We want to make 1,000, so that's already going to be 85,000. The rest of the things we're going to have to accept. The telephone, we're going to order, we're going to deal with customers. Well, it'll be in that region. It's not going to be much more, it's not going to be much less. Water, hopefully it will be in about the same amount. So let's add up the total costs, and we're going to just move the calculator so we can see those costs there. It's 85,000 plus 2,500, that's for your advertising campaign and your distribution, plus 2,137, plus your 5,252, plus 7,500, plus 25,000. And that's going to be my total cost for making 1,000 pots. What is it? It's 1,000 127,389 rand. That's for 1,000 pots. So we've got the answer to that. We're going to use that figure in a minute. Let's just make sure that we can take that, put it to where we want the answer. There it is. What is the cost for 1,000 pots? There we are. So we would like to make 1,000. What is the cost? Calculate the total cost to make 1,000 pots. That's what we've done. The total cost. And we are going on to the next one. It says, if 1,000 pots are made each month, calculate the cost of one pot, of making one pot. So now, what we've got to recognize here is that 1,000 pots are going to cost that, and that's taking in all the costs, all the expenses, everything has gone in there. We're going to need to divide it by 1,000. So I don't think that's too difficult to recognize. Dividing by 1,000, one pot is going to be 127 Rand and 39 cents. We're going to round off. If we round off to the nearest 10, it's going to be 40 cents. That's what the cost of making the pot. This would be our cost price. Okay, let's go on to the next one. And we're going to say, what is the minimum value that they have to sell each pot for in order to make a profit? Well, there we've got it. The minimum cost of making the one pot is 127 Rand 40. That's the minimum. You're not going to make any profit unless you sell it for at least 127 Rand. So that's the cost price. The minimum value you have to sell each to make a profit. To make a profit, it has to be more than 127 Rand and 40 cents. So anything less than that, you're making a loss. We've got to sell it for at least that. There's no profit. So if the selling price for one pot is 250 Rand, okay, selling price, how much profit do they make on 1,000 pots? Well, guys, here is it's not a difficult question. Let's work out the profit on one pot first of all. So one pot, if we sell it, selling price, the selling price of minus the cost price, and what are we going to say? That's 250 Rand minus 100 and, I hope we can move that, 127 Rand, 127 Rand and 40 cents. This will give me my profit. It's profit on one pot. So let's do the calculation and do 250 minus 127 and 40, and that's going to give us 122 Rand and 60 cents as my profit. 122 Rand and 60 cents as my profit. Now, what is it going to be for 1,000 pots? Well, I must multiply that by 1,000, because I don't just want to know the profit on one pot, I want to know it on 1,000 pots, and if I've done it correctly, it gives me 122,600. So on one pot, it was that. On 1,000 pots, it's going to be 122,600 Rand. Got it? Hope so. Hope you can see that it's not that difficult. We've got the story sorted. So let's move this and let's see the last question. So calculate the profit margin of each pot using the formula. Profit is going to be the selling price minus the cost price divided by the cost price. So I think we've got all of that. Let's make sure that we've written it down, and we've got profit margin. We're going to say the selling price was 250 minus the 127.40 divided by the cost price, which was 127.40. So this is known as the profit margin. Let's work out what it is. There we go. We're going to say 250 minus 127.40, and we're going to do that as an equal, and then divide it by 127.40. And it gives us a profit margin of 0.96. It's a fraction, 0.96, and there you go. Right. Now, guys, it's been really great being with you today. Hope you've enjoyed it. Hope you've got a good insight now to income and expenses, and you can interpret different types of questions for this topic. I'll see you again soon.